Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, we can see that from Friday's price action, the Australian dollar gained bullish traction after revisiting the bottom side of the range of 69 cents, rebounded, and with the engulfing candle has put a slight firmer step to the start of the week. The rebound was supported by firmer expectations of further RBA tightening following Governor Bullock's comments that capacity constraints require a more restrictive stance, reviving May's hike speculation. Solid trade data and resilient services activity added support, while the softer US dollar, driven by cooling labour data and persistent expectations of a further Fed rate cuts, helped maintain a bid tone for the Aussie. Looking ahead to another turbulent week, China is set to release its inflation data, CPI and the PPI, while in the US, January's job report has been pushed to the 11th New York time due to the government's shutdown, with recent data still pointing to a labour market resilience as the forecasts hold for payroll growth around 70,000 jobs added and the unemployment around 4.4%. Along with this, we've got the US core retail sales and also inflation data at the end of the week, being the US core CPI and the CPI month on month. So let's have a look at the technicals. We can see the RSI is married up with that bullish engulfing candle, but I feel like previously seen, and we are locked in this broad range of 69 to 71. We may find profit taking may emerge again and see a pullback from 71 back to the bottom side of the range of 69 cents and reassess. Looking at the euro, we can see that there was a posted weak engulfing candle, but would like to see these technicals a little bit firmer to the upside, and maybe a break above 118.25 could give further scope on towards 118.65.75 and reassess. Any weakness? Well, support is still around that 117.5, so just keep an eye on that. Unless the technicals buckle, then we could see a little bit more of a deeper pullback to 116.80. A whipsaw price action for dollar yen. Without the day being closed, we can't call this an engulfing candle as yet, but nevertheless, I still feel bearishness is in the making, and therefore a rejection, as we've seen from 157, look back to 155 and reassess. Sterling also a little bit slower on the uptake, but gradually getting further coverage, but the technicals are still lagging, so we could see this momentum soon fade and look back towards 135.65, but nevertheless keep an eye in case we do get a break above 136.25.35, and then we could see a rally on to 137. Finishing up with commodities, another rebound in front of that key broad trend level. And if the market holds into this pattern, then we could see the rally on to 5,500, with the broader call way up around 6,000. But there's still a lot of work to do to get up there. Nevertheless, the bulls are still in favour of seeing this move as the second rejection that we've seen here. Any pullback, again, likely to find bargain hunters. And oil, a little bit weaker, but it's still likely to hold, I feel, above this support area around $62 a barrel, and eventually look up towards 65 and reassess. Well, that's about it. Thank you for joining me. And as always, look out for the intraday report, and I hope you enjoyed a great start to the new week.